Midweek update for the Forex markets. We'll start with the euro. Well, it's very oversold, has been for a while, so that's not particularly relevant. Markets can stay oversold for a long time. You can see here, middle of July through to the beginning of August, we were oversold for a long time, but we still dropped a fair old amount. Slightly positive candle yesterday, though. I really wouldn't get too excited about this. I don't think this is the start of a big turnaround, but it may just indicate a little bit of a recovery today. I got some levels on the report this morning, targets and resistance and selling opportunities, so I won't bother to repeat them here. Just be aware that, this fairly bullish candle coupled with the oversold situation might just trigger a little recovery into the end of the week to the targets that we've got on today's report. Obviously a break below 131.00 is going to trigger more selling pressure, and we've got targets there as well. So that would be the signal that yesterday's slightly positive candle is irrelevant, as would be the oversold situation and the bear trend, which is the most important part of this chart here. This dominant bear trend going over nearly 4 months now, almost exactly 4 months in fact. That is what is dominating, so we've really got to be careful if we're attempting to buy into longs for any sort of recovery. Got to be very careful and look to take quick profits. Cable had managed a bit of a recovery last week, just a gentle recovery up to this Fibonacci resistance level here at 166.16. We actually pushed as far as 166.44. You'll know that on your reports I had 166.50 as a big resistance area. We just stopped below there and then plunged yesterday. That was a bit unexpected actually. Didn't see that one coming, to be fair. Let me see now. We dropped 150 points, 150 pips rather. So we're now hitting this fib support here at the 164.60 area. That's of course going to be key. Doesn't look particularly good. I wouldn't really want to be buying into any significant longs down at this support. The risk is that we break here and continue lower. Again, like the euro, if we do get a bounce, I think it'll be fairly short-lived, and you've got some resistance levels and selling opportunities on today's report to look for. Obviously a break below yesterday's low, well, that's going to be quite significant. Break below 164.50 anyway is going to just keep this bear trend intact. We've got a good 2-month bear trend going here now, and that really is what's dominating. This strong dollar theme is causing gold all sorts of problems as well. As we've mentioned, we've been holding below this 200 day moving average, the red line. We finally broke significantly below the 100 day moving average yesterday. We've been hovering around that for a couple of weeks really. Yesterday we decided that wasn't going to hold, and sellers came in. I think the stronger dollar had something to do with it, pushed us down to this important trend line support here around the 1272 area. That trend line goes all the way back to the 31st of December, so it's a big trend line, 9-month trend line or 8-month trend line, and it was broken, so that is significant. Yesterday's break lower below this 1270 area is important, and it does signal further weakness to come. I think we found support around this Fibonacci area, this low 1260 area, but if we break below there today, well, you've got targets and on today's report, so I won't need to repeat them. Obviously this trend line is now resistance in the low 1270 area. That also coincides with these August lows, so that's going to be key. I would imagine that resistance will hold if we manage to bounce as far as that today, and it's only really a weekly close above there that you'd have to say that that's a false break. I don't think that will happen. I think we will continue lower. Aussie dollar has been behaving fairly well. This is sort of looking a little bit like some sort of head and shoulders topping pattern, but still needs a bit more development. More recently we've been trading mostly within the range as we had suspected we would. We tried a little break up above here last week, but it was a false break as we warned it might be, and we're back below that 200 day moving average, and of course yesterday we took a big old tumble from that 200 day moving average. We're near some trend line support here. You can see this little trend line here around the where are we now today, around the low 92.60 area. Then we've got this very important trend line here around the 92.45 area, so that will be key this week. If we can hold here, then we'll stay within this range. I'd be very surprised to see us break above this 200 day moving average and trend line resistance in the 93.35-45 area, and of course we'd really have to clear these late August highs at 93.73 for any outlook to turn more positive. Otherwise we're sideways, and quite probably eventually a break below this 92.45 area I think is more likely than a break higher. Dollar yen's been pretty nice lately, a good steady uptrend since the middle of July. We had expected that once we broke above that triangular trend line which went back to, let me see now, that was the beginning of the year, January. We had that trend line starting in January, and once we burst through there 2 or 3 weeks ago, that was our buy signal. So that's worked quite nicely. Yen's hit all our targets. We've got very close to we got to 105.18 yesterday. That was our target. We've topped at 105.26. We have, of course, got these year highs, this year's high of 105.44. More about that on today's report, so I won't bother to repeat what I've written. Getting a little bit overbought in the short term though, so watch for some profit taking, but I don't see a big sell-off right now. Looks like any dip would be just a further buying opportunity, but of course we've got very important resistance which we've got to watch carefully, so read today's report and take note of what I've written there, please.